Okay, greetings, my people. We are here once again. Welcome to today's class dedicated to small and medium sized business owners, especially those who are still running manual processes in their business. This particular update is for you. In our introductory video, we mentioned that there are three major ways a small business might be losing money from customers, without knowing it. Though there are many other ways you can lose money from customers as a small business owner, which includes poor customer services, ineffective marketing, inefficient management of resources, inability to adapt to changes, and refusal to outsource important accounting services to professionals or consultants. But inside all of this, there are three major ones that occur on a regular basis, if not daily basis. And this has a lot of negative impact on your cash flow, but you do not know about it. And this, like we said, mostly happen to those who are running manual processes in their business. Those who have refused to embrace change, those who have refused to adapt to the technology evolution in business. So let us look at them one after the other. First is human errors leading to undercasting of customers' invoices. There are many small business owners who run a reasonable volume of transactions on a daily basis, especially those who are into trading, that is supply of goods, those who are into buying and selling. So you find out that some of them write invoices on a regular basis, and these invoices most times are credit invoices or cash invoices, as the case may be, but these are regular occurrence. So now, how do they lose money through human error in this manner? You find a situation whereby either the business owner or the boss or the employee are writing invoices for a customer. In the course of writing that invoice, they will have to make use of the calculator because they are not computerized. It's a manual process. So they will have to make use of computer to calculate the total of the invoice or to cast the total of the invoice. Now, in doing so, the possibilities are there that they will get the figure wrong, and in most cases, it's an undercast situation. For example, an invoice that is supposed to be 5 million is calculated to be 4.5 million. This is an example. What this means is that that invoice is undercharged by the sum of 500,000. And because there are many other invoices to be written, they might not take their time to calculate it because they have to meet up with the orders on the table, in writing the invoice. Also, the calculator can malfunction, and before you know it, that is an undercount situation. And then this figure is given to the customer to go and make payment. The customer quickly go and make payment based on the total on the invoice, not knowing that that total is undercasted to his favor. And in some cases, if he knows, he might keep quiet. If that person is a dubious person, the person will keep quiet. And it happens in most times, they will keep quiet and then go and make that payment to you. And that is it. Because you're running a manual processes, you don't have a good accountant, you don't have a system, nobody checks anything. You will not know. And that money is gone. We are speaking from experience. We have seen situations where this kind of things happen. And sometimes it runs in a huge amount of money. And it's not one, it's not two. So you can imagine when you put it together, how much you could be losing at the end of the day. So this is why we recommend the use of accounting software, so that will set up your business processes for you and protect your business. Because if you do that casting manually, and which is prone to error, if you have a system that generates invoice directly, such mistake will not happen, because the system or the computer can never make errors of casting. It's impossible, because it's what you give the computer that it will give you, except you made mistake in your figures. But if you put the right things, the total in particular is exactly what it is. There is no overcasting, there is no undercasting. Do you get? So that is the advantage. That is one of the advantages of going computerized or automated. You will avoid some of these human errors. So you can see how much you'll be losing in the name of undercasted invoice, which most customers will never tell you. In our experience, this was a customer, our client made an invoice for, and in that invoice there was an error, about 950,000 on that casted figure on that invoice. But because there was no system, it was not found out. Whether the customer found out when he or she got home, we don't know. But this is us, you know, putting things in place, put the systems in place, and then try to enter that invoice on the system. And then this, what we are seeing on the system, the total is different from what we are seeing on the manual. It happened that there was an undercast of that much, 950,000. You can imagine that amount. So the invoice was undercasted, and that was the customer immediately paid what he has on the invoice, and which you cannot blame him. And that is how we discovered we have to get back to the customer and get the invoice, snap the invoice and send to him, and then he now saw that there was an undercast on that invoice. He said he didn't know, which is possible he did not know. But in some cases, some of them will know and pretend as if they did not know. So you see how we recovered that 950,000, and this is just one, which means if you walk backward, you may see many more that the business must have lost over time. Do you understand? So this is one of the things getting automated or getting computerized or getting the setting of accounting software does for you. It will minimize errors completely. So many businesses are losing money. Many small businesses, especially those who are still running manual processes, are losing money as a result of this. Human errors leading to undercasting of customers' invoices. Let's go to the next one. The next one is lack of due diligence observance leading to loss of customers' debt. This is another aspect, but this affects both the computerized system and the manual system. But it is fair if your system is computerized, because at least you will have the invoice generated on the system. Now, how does this happen? This is a situation whereby there are no processes. There are no processes in place that ensures that due diligence are followed in executing certain accounting transaction. A customer comes and you raise an invoice for the customer, which is a credit invoice. And because of your lack of observance of due diligence, or lack of existing controls in the business. You just prepare an invoice and the customer did not sign the invoice. For you, it doesn't matter. It doesn't mean it is not necessary. Now, the implication is that the customer will go with such an invoice that is not signed, that he did not acknowledge. And if he is dubious, which many of them are, they will deliberately delay the payment of that invoice, or maybe pay a part and then delay the remaining balance. And then that will take a long time. They will deliberately leave it for a long time, knowing fully well but that at that time you may be struggling to provide the record as evidence. Now you're going for the recovery of your debt, telling the customer that the customer is owing you for invoice you for goods you supplied to him so time, which he paid part or did not pay at all. Do you know that because that invoice was not signed or not acknowledged by that customer, the customer can deny you? Yes. Our experience was that the customer denied a whopping amount of 2 point something million because the invoice could not be found, and where it was recorded in the ledger that anybody could have, he denied also that anybody could have written that on the ledger. So, but finally, when the invoice was found, there was no acknowledgement by the customer that he actually received such goods, or he was actually supplied such goods. It became a problem. To recover that money became a problem, and it resulted into going to court and all of that, and litigation began to take place, because that invoice is the only evidence you have for that transaction. But because the customer, you did not, out of your lack of due diligence, out of your lack of processes and procedures in place, he did not sign or acknowledge a second copy for you. Do you get? And then he denies it. You come with the invoice that this is the goods I supplied to you, and so but his signature is not there. He did not acknowledge it. So he could claim that anybody could have written the invoice on his name because his signature was not there to have shown that yes, he actually received the goods, or that you may have written the goods and he was diverted. He will deny you completely because there is no evidence. He did not acknowledge it. This has happened. We have experienced this kind of thing, and money was lost. The customer completely denied. Because there is no evidence. He did not sign the invoice. So this is lack of, where you don't have processes and procedures in place. Lack of due diligence observance. Sometimes we feel it's not necessary, it's not important. These are some of the ways you lose money without knowing it. Now, if you have a system in place, if you have an accounting system in place, even if he did not sign the invoice, you will have that invoice on the system, which even if you print it, he does not have his signature on it. So in this case now, it affects both people who are using accounting system and those who are not using. So the issue here is observance of controls or processes and procedures or due diligence in executing financial transactions or business transactions. Because normally when you make a credit invoice for a customer, the customer must acknowledge it, and in most cases you even put your stamp there. He must acknowledge it. His signature must be there, his name written under it. That will confirm that yes, he acknowledged the supply of that goods, and so he has to pay you. But where these things are not complied with or are not followed, there is that 50% or even more than 50% chances that the customer may deny you and you lose that money because you don't have evidence. Where you record it is not enough because anybody could have recorded it. It is that invoice he must have signed, that is the evidence. So the fact that you recorded it on a ledger book, or is even on the system, generated on the system on the account of the person or his name. But as long as a copy which he or she signed and his name is there, you don't have such. You don't have any evidence, because in the court of law, that's what will be asked. They will ask for evidence, and in that evidence, his signature must be there, because anybody could have raised invoice in the name of anybody. But if his signature is there, showing that he acknowledged the supply of that goods, he cannot deny it. You see, so the solution to this is, whether you are using an accounting software or you are not, whenever an invoice is raised, a credit invoice, ensure that your customer signs it, puts his or her name or representative of the cost of the company or of your customer. Ensure that their names are stated. Whoever that is coming to carry the goods, their names are stated on the invoice, and their signature affixed on the invoice. And then what you do, for the sake of the invoice not getting damaged, maybe in future, you understand, this is why we also recommend, we talk about accounting system, because whatever you store in the system or on the cloud will never go away, no matter anything. But if it is manual, it's subject to damages, like water can spoil it, fire can burn it, rats can eat the invoice up, and by so doing you now start looking for the invoice, you will not see it. And as long as you don't see the invoice, there is no evidence. So what you do is, when after signing, if the customer has signed the invoice with his name, take the invoice, scan it and store it on the system. Put it on the system. Some softwares, some accounting softwares has folders, have where you document things like this. So you scan it and store it on your accounting software, so that whenever you take backup, it's there. On the cloud is there. So at any point in time, you have access to it. So whether the manual is there or not, you are covered. You have evidence of that particular transaction. So this is what happens. Some customers are this dubious, especially when they know that you don't have a system. So when they know that you don't have a system, they might deliberately delay payment for a particular transaction, knowing that you don't have a system. You may not even be able to provide the invoice when the time comes. Because where you wrote it is not enough. It's the invoice that is acknowledged by the customer. You understand? So you now see that you could lose money for not observing this due diligence, for not ensuring that customer signs your invoice for you. These things, we take them as unnecessary. We take them as not needed. But at the end of the day, we are losing a whole lot of money from it. Another one is failed bank transfers into your business bank account by your customers. This one is common these days, because the banks in Nigeria these days are completely something else. Everybody is experiencing what they call system failure and network issue and all of that. So if you don't have a good system in place, if you don't have processes that checks transactions, you might be having a situation whereby customers, after making an invoice for customer, you say, this is your money. The customer says, okay, let me transfer. And the customer does the transfer right in your front, and even shows you the debit alert or shows you the receipt. But one thing or the other may lead to the decline of that transaction. Yes, either network or whatever thing may lead to the decline of that transaction, and you will not know, but the customer may know, because he may get a reverse credit on his account, but he will not say it. He will keep quiet. So if you don't have a system, if you don't have what we call bank reconciliation system, or an accountant that checks these things, ensure that at the end of every month your bank statement is checked to find out if the transfers that customers claim to have made into your bank, and all the money you have paid into account are okay, are actually credited to your account or not. You will not know, and that money will go. Some customers will not tell you. We have seen these cases also. We have seen situations whereby during bank reconciliation we noted that particular certain transfers did not reflect in the bank statement of our clients. And then we start going back to the customers, and that was one day, and I say, oh, it's like the thing decline and that was and all of that. You understand? If such checks is not done, that money is lost. And these things sometimes involve big amount of money. And by the time you multiply it, how many the number of times they happen, it's a big money that you're losing. So we are once again um, appealing to business owners, small business owners, to put processes in place. It will not cost you much. That which you are trying to avoid in terms of the cost is nothing compared to what you are losing for not doing it, which at the end of the day amounts to penny wise pounds foolish. So get in touch with consultants like Active Arc and FinFast Pro Solutions. We will set up processes in place for you that will detail some of these things, because our aim, our our objective is to protect your business, especially your major resources, from theft and mismanagement. That is what FinFast Pro Solutions and Active App is established to do. We are commissioned to protecting your business. So get in touch with us. We will be glad to work with you to put processes in place that will safeguard your business major resources, and in turn let your business grow. Because when these things are happening and you're losing money little by little like this, it will affect your business. It will be taking you backward. You will not grow to that extent you're supposed to grow, because it's just the same like a container of water that has leakages. The more you pour the water, the more it leaks. It will never be filled up. It remains stagnant. And this is why most small businesses in Nigeria have remained stagnant. Some have fall. Some are supposed to have gone beyond where they are supposed to, where they are. But because of all these things that they neglect, you feel it's not important, or it's money, it's cost, that because of its cost implication and all of that. But you don't know that what you're losing is higher than what you will spend to put these things in place. So these are the three major ways you might be losing money in your business without knowing it. So we decided to bring this update because that's our mission, to help you protect your business. So look into your business and know where you might be going wrong as regards to these three aspects of transactions in your business. You might be losing money, and we ask you that the right thing to do, if you are still on manual processes, you just have to get your systems computerized. You need accounting software, a cloud-based accounting software for that matter. There is this wrong impression about cloud-based accounting software. People say they will hack your accounting platform or your business platform. They will do that, they will do this. It's no longer like that these days. The cloud-based accounting system is the best place where you can safeguard your business platform or your business information. Because even if it is hacked, even if the database is hacked, those people that hack it, the hackers, do not have your password, because the information on your business platform is encrypted. It's encrypted. What do we mean by that? It's encrypted in such a way that you cannot read it. It's not readable if you don't have the password. So even if they hack it and open it, as long as they do not have the password to log in, what they will be seeing will not be readable to them. I don't know if you have seen situation when you open a particular file, you're seeing just write off that does not make sense. So they can't read it, so it's useless. The safest place to safeguard or to protect your business database is on the cloud. That is what it is. All accounting softwares are protected by Amazon Web. So your business database is secured for life. That's one good thing about it. So let us embrace the use of accounting software. It will do us good in our business. See you in our next update.